Just 2 weeks ago, SpaceX did something many investors thought might never happen. After years of speculation, rumors, and private funding rounds, Elon Musk's space company finally went public. The IPO priced at $135 per share, investors rushed in. The media couldn't stop talking about it, and within days, the stock exploded to above $220 per share. For a brief moment, it looked like SpaceX was about to become the next Nvidia, but then the stock started falling. The rally stalled, the momentum faded, and suddenly investors found themselves asking a very different question. Not how high can SpaceX go, but what is SpaceX actually worth? Hi there, I'm Deervolt and welcome to Capital Insider, and today we're looking at one of the most fascinating stock market stories of the year. Because this isn't really a story about rockets, or Elon Musk, or even SpaceX. This is a story about hype, and what happens when the most anticipated IPO in modern history finally meets reality. To understand what happened, we first need to understand why investors were so excited. Because SpaceX isn't just another company, it's a phenomenon. When people hear SpaceX, they don't think about balance sheets, they don't think about quarterly earnings, they think about rocket launches, Mars, astronauts, Starlink, innovation, the future. And perhaps most importantly, they think about Elon Musk. Whether you love him or hate him, Elon Musk has become one of the most powerful brands in the world. Tesla, SpaceX, Starlink, Neuralink, XAI, many investors weren't just buying SpaceX, they were buying another Elon Musk story. A story that promised massive growth, massive disruption, and potentially massive returns. The problem? Stories are powerful, but eventually every story runs into reality. So, what happened? The IPO launched at $135 per share. Immediately demand exploded. The stock climbed and then climbed again, then climbed some more. Financial influencers were talking about it. Mainstream media was talking about it. TikTok was talking about it. Reddit was talking about it. Everyone seemed to have an opinion. And the higher the stock went, the more dangerous the conversation became. Because investors stopped asking, should I buy SpaceX? And started asking, did I miss SpaceX? When investors start worrying about missing out, rational thinking starts disappearing. At $150, the stock looked exciting. At $180, it looked unstoppable. At $200, people started talking about $300. And at $220, people started talking about $500. And that's usually a warning sign. One thing investors rarely talk about is what I call the Elon Musk premium. Companies connected to Elon Musk often trade differently from ordinary businesses. Investors attach possibility to Elon Musk, not just performance. Potential is easy to imagine, execution much harder. And at some point, investors stopped asking, what could this company become, and started asking, what can this company actually deliver? Now imagine you're an investor. You didn't buy at $135, you didn't buy at $150. You waited. The stock kept going higher. Every headline is bullish. Every chart is green. Everyone on social media seems convinced this is the opportunity of a lifetime. So eventually you buy at $210 a share, maybe $220. Then the stock drops. And for the first time, you're forced to confront a question you probably should have asked before buying. What is this company actually worth? That's the moment when investing becomes difficult, because hype is exciting, valuation is boring. And unfortunately, valuation is what eventually matters. Hey guys, Studio Deervolt here for a second to tell you about today's sponsor, Weekly. Now if you're anything like me, your life is probably scattered across about 17 different places right now. You've got tasks in your notes app, ideas in your WhatsApp messages you send to yourself at 2 in the morning, random screenshots you'll definitely forget to look at again, 27 browser tabs you swear are important, and somehow a sticky note on your desk that's been there since March. You know that feeling when you know you wrote something down, you just can't remember where. That's exactly why I started using Weekly. Instead of trying another massive productivity system, Weekly is just one place to keep your life together. Your tasks, your notes, your reminders, your budgeting, even your AI assistant. Everything lives in one place, so you're not constantly trying to remember where you saved something. And unlike other apps like Notion, opening weekly doesn't feel like you've accidentally started a second job. It's simple, it's clean, and it actually helps you feel more organized instead of less. If you'd like to check it out for yourself, head over to myweekly.co.za and use the code CAPITALINSIDER for 15% off. Subscriptions start at just $5 per month, which is about 20% of what you'd be paying for another app. Thanks again to Weekly for supporting the channel. Now let's get back to the video. Nothing actually broke. SpaceX didn't stop launching rockets. Starlink didn't stop growing. The company suddenly become worse. What changed was expectations. At $135, investors were buying potential. At $220, investors were paying a premium for that potential. And eventually, some investors decided that premium had become way too expensive. So, they sold. Now let's talk about the elephant in the room. Valuation. Because this is where the SpaceX story starts getting complicated. When investors compare SpaceX to Nvidia, Tesla, Apple, or Amazon, they're not really comparing products. They're comparing expectations. At its peak above $220 per share, SpaceX wasn't being valued based on where it is today. It was being valued based on where investors believe it could be in 10 years from now. That's a huge difference. The bulls look at the company and see unlimited potential. The bears look at the company and see enormous expectations. And both sides might be right. That's what makes this story so interesting. So, is SpaceX the next Nvidia? Well, that's what investors desperately want. The next company that turns thousands into millions. But here's what people forget. Nvidia didn't become Nvidia overnight. Tesla didn't become Tesla overnight. And Amazon, it didn't become Amazon overnight. All three experienced massive declines along the way. The biggest winners in stock market history rarely move in straight lines, which raises an interesting possibility. What if the pullback isn't the story? What if it's simply the beginning of the story? So, what happens next? Nobody knows where SpaceX goes from here. The stock could recover, it could move sideways, it could fall further, but the easy phase is over. The hype phase is over. Now comes the hard part, execution. Can SpaceX continue growing? Can Starlink keep expanding? Can the company justify the expectations investors already priced into the stock? Because from this point forward, Wall Street won't care about dreams. It will care about results. So, SpaceX went from $135 to over $220 in a matter of days. Investors called it the next Nvidia, the next Tesla, the future of humanity. But then, the stock pulled back and suddenly the conversation changed. The real question isn't whether SpaceX is a great company. Most people already agree that it is. The real question is whether it's a great company at this price. Because if it can live up to the expectations investors have created for it, this pullback may eventually be forgotten. But if it can't, investors may discover that buying the future is much easier than profiting from it. So what do you guys think? Is this the final pullback, or are we going to see SpaceX fall a lot further? Let us know in the comments below, and while you're there, drop a like and subscribe so you stay updated with all of the stock market news. Thanks for watching the video, and as always, happy investing.